Welcome back, guys and gals. Welcome back. It's that time of day again here, folks. 7:30 a.m., Monday through Friday. Welcome back to our morning prep. We're looking at crude oil and natural gas here this morning in this webinar. And, of course, I'm here with my good friend and colleague, fellow School of Trade member, Marty Errico from Traders Audio. Him and his partner, Jeffrey, do a great job every morning at 8:50 a.m. They broadcast live from the NYMEX exchange. And, of course, my name is Joseph James. I'm from SchoolOfTrade.com. Come out and see me any day of the week, Monday through Friday, at 8 a.m. Eastern Time in our live trade room. And this morning, we're going to break this into two parts. I'm going to start with my screens, and we're going to end up on the trading floor. Going from the screen to the floor this morning, again, my name is Joseph. I'm a lonely old technical analyst in my home office here in Los Angeles. I'll provide you with a top-down approach, meaning we're going to start with some slower time frames this morning. Take a look at direction, take a look at support and resistance, look at what's happened over the past few weeks. And if I can look at what's happened over the past few weeks, I'm then going to move to analyze what's happened over the last few hours. What's happened overnight? Was there anything major that happened overnight? Was there any new higher highs or lower lows? What happened coming out of London? We're going to be trading the U.S. morning session. And when we're trading the U.S. morning session, now we can look at the previous session to that, which, of course, in this case, is the London trading session. So I'm looking at the last few weeks, then the last few hours, and if I can put that together, usually we can put together a good idea, as we call an educated guess, as far as the direction at the open this morning. See, if we can pick the direction, we put the odds in our favor. If I can eliminate one side of this coin, right, either looking for longs, looking for shorts, then I know that I can dramatically increase the odds of my success, and I can also make it easier to trade today, especially for a new student of mine, because when we can eliminate one side of it, we can really focus on the other. Now, there are some rules associated with that because we don't want to be completely married to one direction, but we will be looking for the direction at the open this morning. If I can find the direction, I'm going to start looking for those high percentage trading opportunities as early as 8 a.m. Eastern Time. This morning, we've got a couple nuances to be concerned with today. So trading at 8 o'clock Eastern Time, we'll definitely be looking for that. But before we get done today, we're going to bounce all the way across the country from Los Angeles all the way to New York City. I want to hear what Marty's seeing on the trading floor. It's really important because today's Fed Day, all right? Unless you've been living under a rock the past few weeks, we all know, highly anticipated Fed announcement today. I'm anxious to hear what Marty's hearing and seeing and feeling on that trading floor. This is something that we really don't get a lot of as screen traders. We don't have access to that material. So it's going to be important that we listen into Marty this morning. He's going to tell us what market direction looks like. Very important intermarket divergence between crude oil, RBOB gasoline, heating oil, and Brent crude. Market internals, option prices, and always very important, those pit session trading levels. Guys, crude oil, natural gas, they have some of the most active trading floors in the world. They are definitely still kicking, right? The trading floor is definitely not dying there. And so we know that we've got to pay attention, right, to what they're doing on the floor. So we'll be listening to Marty here after we take a look at some charts. And I'm always excited to see if we can figure out if I'm wrong or if Marty's right or who's got the better look at this today. So welcome aboard. Let's jump into some charts today, and let's see if we can't set the stage before we begin. Now, as we always do, Monday through Friday, before we start this call, we put all of these charts up on our crude oil blog. Just want to let you know, though, if you go over to sidewaysmarkets.com, our main trading blog, sidewaysmarkets.com, you will see a link here for the crude oil squawk and prep. So it's right there for you. Grab a look at that, and that's where you've got today's charts, today's commentary, and later on this morning, you'll see the recap video that I'm recording at this time. First thing I want to do is I want to look at the news. Now, you might be saying, but Joe, we're looking at charts, right? Well, the news is very important because we have to be aware of what our surroundings are this morning. What's the lay of the land? What's the schedule for today? As we begin, I want to identify a few things. First of all, are there any red star news events today? And then second, what are the minor news events? What are the red star news events we see today? I see two of them, GDP and FOMC. 8:30 we have GDP. 2 o'clock this afternoon we have FOMC. Now, a red star news event tells us right away, expect to see wider trading ranges, more volume, more volatility, and potentially more trading opportunities. Whenever we see a red star news day, our ears perk up, we get excited because we know that today has some excitement right around the corner. Now remember, just because we have red star news does not mean I can disobey all of my entry, exit, and trade management rules, right? I still have to remember my risk tolerance today. In fact, today is probably even more important. But a red star news event always tells us, let's get ready to rock. We also see here today that we have some minor news. ADP employment report at 8:15. We've got the ECI, the employment cost index at 8:30. Chicago PMI at 9:45. And drum roll, please, there is a very important news event today at 10:30 for crude oil inventories. Now, we only get a few times a week where we have news events that specifically apply to one market. Today, we have it with crude oil inventories. Tomorrow, we have it with nat gas inventories. These are the only two news events that we have as day traders that apply only to one market. Think about it. So if we know that crude oil inventories only apply to crude oil, that's going to be a big clue. We've got our first red star news event at 8:30 this morning. That's going to be a very big clue. But I'll tell you guys, today's Fed Day. I think all eyes are going to be on Helicopter Ben this morning. We know the Fed announcement 8 times a year. We get the FOMC meeting announcement. The meeting began yesterday morning. And, of course, we culminate that 2-day meeting with an announcement here today at 2 o'clock. And we've got the press conference that will follow 15 minutes thereafter. Guys, under normal conditions, if we didn't have Fed Day today, I would say all eyes on GDP 8:30 and the inventories at 10:30. But looking at this news calendar, guys, I have a funny feeling everything is going to be a little bit muted this morning as we wait for that FOMC meeting announcement. Now, I've been doing this almost 13 years now, and in my experience trading on FOMC day, you want to get in early and get out early. See, what happens is when you have a major news event in the afternoon, the locals in the pit, the institutional traders at their desks, right? The speculators like you and I in their home offices, we go to lunch earlier. That way we can come back from Sizzler and get our seat for the FOMC meeting announcement at 2 o'clock. See, when there's news in the afternoon, we tend as human beings to push our morning forward a little bit, and so we'll finish our morning a little bit earlier so we can come back from lunch earlier. I know it sounds like a Stone Age thinking, but that's the reality of what happens when it comes to the mass population of traders. So we know this morning that we're going to have to get in early and get out early. If you're going to be trading this afternoon, I recommend trading a simulator until you've seen 6 of these FOMC news events happen in your career. Brand new traders, rookie traders, traders who cannot protect their own capital and don't know how to manage risk should stay the heck away from FOMC meeting announcements. All right, until you've got some experience, until you can control your risk, because this thing can get very, very volatile. We'll talk about that a little bit later on today with our students in our live trade room, because for the most part, it shouldn't affect us that much trading crude oil today. Why do I say that? Because we have 1030 inventories. And with 1030 inventories, we know the price is going to be a little bit sloppy before 1030. So we have to be very, very careful trading crude today. Just looking at this news is a little bit intimidating. What day of the week is it? What week of the month? This is the last day of the month. What happens in the last day of the month? The last day of the month, Hail Mary. If I don't get into this trade, my boss is going to kill me. If I don't make money, I'm going to lose my job. If I don't get this position exited or filled or manipulated, my client's going to drop me. If I don't pad my numbers before the 1st of next month, if I don't look good on paper, I am in trouble. I've lost a ton of money this month, and I'm trying to make it back, right? Or I've made a ton of money this month. What do I care? It's house money. As you can see, the emotions that play in at the end of the month mean that anything can happen this morning. And that tells me that traders may be discounting today's price action, waiting for the FOMC news event. Okay? Many traders may say, heck with it. It's the end of the month. I'm not risking anything today. I'm going to wait till we see FOMC come out. So we may hear from Marty here in just a few moments, and Marty may tell us, guys, it's dead quiet on the floor this morning, right? He may be seeing dead quiet crickets chirping on the floor. At the same time, though, he might also be seeing tremendous action. People coming in at the end of the month to participate, either out of necessity or out of speculation, ahead of this crude oil inventory report. So it's a little bit tough to say. It's a kind of a moving target as far as I'm concerned. I could easily see this day, the end of the month, going either way. GDP is a major news report, but it's often a sleeper. In my opinion, the GDP report is all show and no go, right? It's all show and no go, because what usually happens is everybody's watching that GDP 2 weeks in advance. The numbers have already been calculated. The tabs have already been run. The analysts have already counted all the beans. And now that self-fulfilling prophecy, pricing in the news, is usually what occurs ahead of GDP. So by the time we get to GDP coming out, usually all the analysts have already put those reports on the desks of their managers. The traders have already executed those trades, and price has already been priced in. So we're probably not going to see much from GDP this morning. Boy, I really hope we do, because this may be the only real opportunity we get today. It might be that 8 o'clock till 10 o'clock time. We know that with 10:30 inventories, I'm sitting on hands from 10:15 till 10:40. I'm not touching crude. And we know that we usually get the best opportunities early before 10 or after 10:40. But then again, that puts us directly into everyone going to lunch to get their $5 footlong a little bit early this morning, right, ahead of FOMC. So as you can see, it's a little bit of a moving target. We've got bits and pieces that are going to have to line up today for us to get some great opportunities. Now, you know me. I'm ready for anything. But from what I can see so far, we're going to have to get our money made early this morning, because we're going to have to be careful ahead of that 10:30 news. And then after that 10:30 news, we have a funny feeling we're going to see that fluttering of price as we go into lunchtime a little bit early ahead of that FOMC announcement. And then if you want to learn more about the FOMC trade, come out and join me today in our live trade room, and we'll talk about that a little bit later. So I spent some time today on the news worksheet because you can see it is a moving target, and half the battle is knowing what's coming around the corner. Looking at some charts now. It's about time you got some charts here, Joe. Anybody can check the news. I know. Here's your 4-hour chart. 240-minute chart. This is a great blend of a daily chart and a tick chart. This is halfway between a slow time frame and a fast time frame. I like the 4-hour chart because it gives me a good idea of what's happened over the past few weeks. We've run way up here through the month of June, collapsed here now in the month of July, right? Not surprising. We went up very, very strong. We should expect to see a pullback at least to the 169 here. And we've seen a very easy to spot and very strong bear channel. Now, it's been 2 weeks now of me telling you every morning we are selling short, selling short, selling short. It's not changing today either. The same thing we've seen the last 3 weeks, the last 2 weeks. If you remember, every morning about this time, I'm telling you, look for those wave patterns short. The high percentage trades at these channels are selling at the highs, selling with new lower lows as we go lower. It's very important we understand, though, that we have support levels, 103.15, 102.23, that's my BMT, and then 175 as we go down. Very important, keep an eye on this area of demand. This is where we saw demand enter the market before we exploded back up. There was demand here before at this 102.85 area. There was demand there before. As you can see, it appears there's a little bit more demand right now. Is this going to be a short-term bounce? What's it look like? I can't tell very much off this 4-hour chart. I can tell the long-term trend. I can tell where we are headed to. I can tell major support below us. And that's really all I'm trying to accomplish with this chart. With this 4-hour chart, my anchor chart, 2 things, direction and support and resistance. I have support levels below me. I have resistance levels at the top of the channel. at the sell zone at 104.28, 105.37 swing high. So we have resistance we're going to use overhead. That's the major resistance. I want to keep these levels on my radar all morning this morning. If I get to 104.28, you better believe I want to be looking to sell short. 105.37, absolutely, I'm looking for a reversal to get short again. So look for the resistance levels to see reversals to sell short. Look for support levels to take profit targets on your shorts. And again, if you're right at support, we are not selling until we get new lower lows. Moving forward here, that was a 4-hour. Moved down to a 1-hour, and now we begin to see a lot more detail. The 4-hour chart really only showed us what the long-term trend looked like. The long-term trend being down, well, the 60-minute chart now shows me the short-term trend. What do you see? Sideways. We've got no lower lows, no higher highs. We are trading sideways here this morning. Now, why would the price action go sideways? No, it's not really because of low volume. It's because of low confidence. The reason why markets trade sideways is because, after all, guys, price action, it does not operate in a vacuum. Price does not just stick at 103.36, right? There isn't a wizard of the NYMEX that, well, maybe that's what, is that what Marty does halfway through his day, right? Goes behind the curtain, right? There's nobody hiding behind the curtain, right?
That's me.
I knew that was you, buddy. That's where you got those shoes from. That's funny. No, there's no wizard of the NYMEX, right? There's nobody that's keeping this price pinned where they want it to be. This is because buyers and sellers have agreed that this is where they feel comfortable with price. It's a very simple phenomenon, right? That's called supply and demand. So we know that if the sellers had confidence, they would be selling short right now. If the buyers had confidence, they'd be buying long right now. If I'm trading sideways, that tells me that we have no confidence to the buy side or the sell side. But Joe, you just told me the high percentage trade is going to be selling short today. Aha, you're exactly right. So what's the plan? The plan is, with a sideways market personality, if I know that I want to look for short selling opportunities, where am I going to get them? I need to get price to go either higher up to the highs, then reverse so I can sell the highs, or I need price to go start making new lower lows again so I can start selling retracements and get short. It's pretty simple. I'm not going to get it right here, right now, and that's going to be what we see on the next chart. So I want you guys to keep this on your radar today. The top of that channel, the 104.29, 104.50 area. Don't be surprised if price jumps up, collapses, and then gives you your best trade of the day. Also, don't be surprised if we go to new lower lows. I want to get below 102.67, and then we start selling retracements, wave patterns to the short side. Be very careful, though, where we are right now. Let's move faster now. I want to show you over here now to a 5-minute chart. On this 5-minute chart, now you might be saying, that's it? That's all you got for me, Joe? I woke up early for this? That's it? Yeah, that's it. As you can see, there's not a lot to report on this 5-minute chart. Usually we got a bunch of stuff on this chart. Zoom out here a little bit further. I like to go with a 5-minute chart and then go back to a 30-minute chart just to kind of see where we are. And look exactly where we are here right now. A little teeny tiny 58-cent range coming out of London, right? We've seen that happen the last 2 days. Look at the difference. Look at the London trading range here compared to London trading range there. You can see how much narrower it is. So we can also see red, 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 right? These are shaded red because we have lower lows, lower highs. So, of course, we can see that bearish trend. I can see, though, look where we are, right in the middle of that range, very narrow range. Now go back to a 5-minute. See, I like the 30-minute glance because it shows me the big picture without having to zoom all the way in. Now I go back to a 5-minute chart, and I can see a lot more detail. Now that I know where I am in the big picture, now I can see more detail. Narrow range. I'm definitely keeping an eye on that previous low of day, 102.67. 104.45, the previous high of day. Sorry for the roller coaster. So if I have price move higher, I do have room here to buy some pullbacks. But we know those are going to be the ones that are going to be most likely to reverse or fail. We can easily see, though, that the previous high of day would be a great spot here. There's that reversal point. Remember we talked about earlier, 104.50 area? There you go right there. So again, don't be afraid to buy pullbacks, but don't be surprised if they fail and we get price to collapse back down in because we have that bearish trend. This is very important. We know the higher percentage trades will be to the short side. So what I would love to see here is price go higher, stall, fail, and I'll be looking to sell that baby right back down in. If we go to new lower lows, this becomes easy, right? We get new lower lows below 103.15, 103.08, 103 even. Now it becomes relatively easy. We're selling retracements. The only issue is going to be the previous low of day at 102.67. We may see a reversal there. And if you've been watching our newsletter the past few days, we've seen that a few times. Yesterday was in the euro. Today just might be on crude oil as well. Would not surprise me if we go range bound and bounce off this previous low of day. Again, we got FOMC day today. We've got inventories at 10:30. But again, we know the plan. The plan is pretty simple. New lower lows, I'm selling short. New higher highs, a little bit lower percentage buying opportunities. I'm going to be focused on staying patient to wait for that collapse. Unless, of course, guys, this thing takes off to the upside and never looks back. You know what that looks like. Every once in a while, they get the market personality that gets something under its skin and it wants to go higher. If that does occur, I will throw my plan in the trash can and get to buying pullbacks. We've seen crazier things here out of crude. Bottom line, though, be patient today. Today is not the day to be trying new ideas. Today is not the day to be going up in sizes on your contract sizes. Today is not the day to forget your stop loss and your risk management, guys. Be careful out there. Inventories at 10:30, FOMC at 2 o'clock. All right. So it's looking pretty quiet on my end. But you know me. I always want to hear what Marty's got to say because Marty's always got he's always great at picking up on what's happening on the trading floor. So Marty, great to have you back here. Happy hump day. Happy Wednesday to you. Is it really this quiet on the floor right now? What are you hearing there, my wizard of the NYMEX?
Hey, good morning, JJ. Thank you. So I have actually a few things for you guys first, and I'm going to start by just showing my screen here. Let me get it up for you guys this morning. And once again, good morning to you. Thank you for joining us. Give you guys a big old pat on the back for coming and joining. All right. The early bird gets the worm, right? All right. So you can see last night we had inventories, API inventories come out last night, and we get a draw of 740,000 in crude. Now look at that. That's really not too much. Again, that's why we're kind of trading sideways, not a huge significant push in the market in either way because look what we were expecting. Look what the expectations are for today. We're looking for 2 million, so 2.3 million draw. So if we get a draw of 740,000 today, we'll probably see similar type of reaction. Again, nothing convincing that's really going to move this market. So let's get down to it. The API numbers came out last night. In crude, we have a draw of 740,000 barrels, right? You see that 740,000 barrel draw here in the crude. Look at Cushing, a draw of 1.9 million. Now that's pretty good. The only problem is gasoline had a build of 1.8 million, right? We're in summertime driving season and gasoline showing builds. That's holding crude back. That's holding the whole complex back, okay? And then we have distillate, heating oil, showing a draw of almost 500,000 at 497,000. So overall, a mixed API report, right, last night. A little bullish for crude, a little bearish for the other products. Now, the other products, I mean RBOB and heating oil, they're holding back crude right now, and that's why we're not kind of getting that chutzpah that we need to go. All right, real quickly, let me just look at the forecast for today's numbers. For crude, we're expecting a draw of 2.3 million. Again, we're looking for a draw of 2.3 million here in the crude. Anything above that, any type of draw like 1.3, a draw like 740,000 like we got in the APIs, that will be just a little bit bearish. Any type of build will be bearish. Any draw that's greater than 2.3 million, so we get a draw of 2.5, right? 2.5 million. Say we get say we get 3 million, right? That's going to be a little bearish as well. So again, if we get maybe bullish as well, sorry. So if we get 3 million, that'd be nice and bullish, right? For gasoline, we're looking for 838,000 for a draw, and we got a build yesterday, so that wasn't really too hot for the markets. And look at distillates. We're looking for 263,000 barrel build. Okay, so that's the API numbers. As you can see, overall mixed report, a little bullish for crude, should be bullish for crude, but it's not really enough to get anything going. Look at price action in the overnight session. Not too impressive. Very tight range. We didn't have a lot in APIs. Right after the number came out, right here, this is where the number came out. When we were trading right here. You can see the draw made crude trade a little bit higher, right? but overall now just dying and fizzling out because overall they're just going to fade this move here come 8 o'clock this morning. Why? Because the number wasn't that all impressive, and overall the API sneak peek preview of the big number for the DOE EIAs. So right now they're looking at an inventory number really not being the biggest number that we've seen in a huge market mover. Okay. All right, let's get to it here. Let's take a look across the board as I was mentioning earlier. We had that little divergence in the report, and you can see we have crude this morning a bit higher. You can admit it from yesterday's settlement, so a bit higher on the crude. Again, we could see a little bit of a push come 8 o'clock this morning as we're getting close to 8 o'clock this morning as we are just a couple minutes away. We could see a little bit of a push in crude to the upside because of the draw and the Cushing draw as well. That's really big. But like I said, RBOB, Brent, heating oil, all trading lower sideways, this morning because of the fact that we got a build in that gasoline number. Again, remember, RBOB gasoline, our leading indication on the crude, right? And it's got a build in inventories. So I have your RBOB trading lower by about 3 pennies this morning. We're at 294, guys, 294.72 on the RBOB. Heating oil trades at 298.81, so a little bit lower as well, down by about a full penny. And your Brent crude, believe it or not, 106.22, down about 70 cents. With your NYMEX regular WTI crude right now trading up 30 ticks at 103.38. Right? This morning so far I have your dollar a little lower right now. Again, overall your dollar is trading just a bit lower right now at about 81.87.5, down almost only really 10 points on the dollar, so nothing big in the dollar. Euro's up 10 points, dollar's down 10 points, that kind of deal. So we have a lower dollar this morning. We do have somewhat of a risk-on sentiment, lower dollar, higher crude risk-on sentiment, so I put the check mark next to the risk-on sentiment. Let's take a look at our spreads. Our spreads are pretty bullish, believe it or not. All of our spreads are bullish, and that's why I'm thinking that we could possibly get a little bit of a pop here at 8 o'clock in the morning, 9 o'clock for the pit session opening bell, as all of our traders come back in and they come and they trade the reaction to this API number in anticipation of DOE number, right, and EIA. Department of Energy EIA report. So spreads right now. If you look with me real quickly, you'll see that the Brent WTI spread bullish right now. It's at 287. Right, we were at 390 yesterday. 287. We're in contango by almost a full $1, so that's very bullish for crude. Calendar spreads this morning. Right, we're going to take a look at that SEP-OX spread. It's about 70 cents or so. SEP Novi, SEP Dees, 183 to $3. So they're all just in a little bit of a minor incontangency right now. Again, remember those prices because that's what we're going to be basing on through the rest of the day. So if it opens at 70 cents and we're down to 65 cents, that's going to be bullish. If we open at 70 cents and we go up to 75 cents, it's going to be a bit bearish. So we're going to be watching the spreads right now. It's looking a little bit higher for crude. Just overall looking at all of our suspects. Volatility this morning also holding steady at about 23%, which is also bullish. This morning here, open interest currently stands at 359,193. That's actually just about 4,000 or 5,000 contracts lower from yesterday, which will be a little bullish as well, maybe showing that they're squeezing out some of those shorts. As we came and we tested 102.67, right, was our low yesterday. We were looking for 102.50, and the reason why 102.50 would be the start of the downtrend is because when we popped, as JJ was saying earlier, when we were sitting at 102.50 last time, that's when we popped out and exploded to the upside. So as important that level was on the way up, it's going to be on the way down, and that's why it will start the downtrend. So you have to keep in mind, we didn't test that 102.50, and they didn't bring it down there to start the downtrend because all the big traders know that that's the beginning of the downtrend. So we didn't get down to that 102.50, and we didn't end up really kind of officially getting into a huge downtrend. Don't get me wrong, we are in a somewhat of a downtrend, as you can clearly see on the chart that I provided here. You can see the bearish channel, but right now we're in the middle of that channel to the upper end of the channel, and we really don't want to, play around with that. Again, we're going to try to get above the balance area of 103.73, which was last night's high after the reaction of the inventory number, and if we can pop up above there, we're going to try to get back up to the previous high day, try to work our way a little bit higher. So again, I'm watching that 103.73 level as we have to break above that. If we can get above the 104s, right, 104.03, then yes, we are bullish, and we're going to be buying pullbacks to get up into Friday's range, right? Remember Friday's range, 105.37 was the high of that range. So we're going to, if we can get above those 104s, we can get a bullish number, we can pop above, right? So that's just looking at crude in the perspective of inventories. Keep in mind we do have GDP still. We have a lot of numbers today. It's going to be a very important, in terms of numbers, a day, very important day in terms of numbers, right? We have GDP, we have employment cost index, we have Chicago PMI, we have crude oil inventories, we have the Fed. I mean, it's huge in terms of just Fed activity, and etc. So once again, ladies and gentlemen, we really have to be mindful about that. Alrighty, so you guys have the forecast for the numbers, right? This is the forecast for the numbers here, right? We're looking at negative 2.3 for crude, negative 838,000 for gasoline, and a build of 263,000 for distillates. So again, remember, anything that's above those numbers we're going to be selling. Anything below those numbers we'll be buying. Simple as that. That's the game plan of attack for the inventory number, and we'll review that before we go into our inventory number and into the broadcast. Okay, taking a look at levels real quickly here, ladies and gentlemen. That's right. We are going to take a look at those levels this morning. Ladies and gentlemen, let's rock and roll. Right now, the spreads are tightening just a bit, and in the Brent WTI spread, it's tightening, so that's bullish a little bit. So the spreads are tightening just a bit. Taking a quick look over now at your crude numbers here, guys. Pit session yesterday, 103.95 high. Your low, 102.67. Again, didn't get down to those 102.50s. We didn't. Again, we traded down to 102.67. Closing settlement number from yesterday, 103.10. 103.10 closing settlement number. Today, your daily pivot's going to be 103.24. Once again, your daily pivot, 103.24, which we are trading just a hair above by about 11 cents, 12 cents. So we're just above that pivot point. If we can open above that pivot point and get above that first level of resistance and open above that first level of resistance, yes, we could be bullish. And we are going to hopefully get back up towards those 104s and buy those 104s again. So here we are, guys. First level of resistance, 103.81. I got 104.52 and 105.80. Right? Support down below, we have yesterday's low. We have the 102.53. I got 101.96 and 100 even 68. Alrighty, guys, once again, open interest actually just decreased just a bit. That's where it was before. Now we're 359,193, which, ladies and gentlemen, is just a little bullish, believe it or not. Net change yesterday was 50 cents down again, but implied volatility still holds steady at 23%. Largest strike levels that were traded in the pit yesterday, the 102 half put to 100 put, they traded about 5,000 times, and that 105 call traded about 5,000 times. So we're even split down the middle. Taking a look at that, just really kind of even split down the middle, ladies and gentlemen, again. Ladies and gentlemen, let's continue on here and take a look over at your natural gas now. Again, real quickly here for natural gas, we are going to be looking to, I'll show you guys on the chart in a minute. We have the high up at 381.10, your low down at 376.10. Closing settlement number here, 379.10. Guys, daily pivot 379 even with resistance above at 381.90, 384 even, and 389 even. Support down below 376, 376.90, 374 even, and 369 even, right? Open interest 291,334, and on the natural gas here, we're going to be trying to buy this low here at the 342s, right? Try to get back up. So look, we're buying the low of the range. You can obviously see the well-defined balance area that we have on the natural gas, right, between 340 and 350, right? We're going to be buying those 342s, the low from yesterday, the low from Monday, right? We're trading within this range very clearly. We're going to buy these lows, come back up and sell the highs, and then trade within range until we get inventory numbers tomorrow. That's the deal with natural gas. We're going to be trading within range until we get inventories tomorrow, unless a big weather forecast comes out from NWS, National Weather Service, or whether that Hurricane Doreen down in the Gulf of Mexico, down towards Bahamas does anything for us. Again, that's Hurricane Doreen. Alrighty, guys, so again, if we get above here now to these 103s, we are going to be looking to buy up to the 104s. If we can break above 104, then we can get up to that previous range from Friday. Again, there's Friday's range. Alrighty, guys, that's about it for me here. Again, I'm over time. I'd like to thank you guys for joining us today, and I'm going to throw it back over to JJ in Los Angeles as we are ready to rock and roll here on a Wednesday.
That's what I'm talking about. Thank you, Marty. As always, great to have you here with us. Guys, don't forget to check out Marty and his partner Jeffrey over at Traders Audio every morning at 8:50 a.m. Eastern Time. And come out and see me sometime in my live trade room. I'm starting up right now, actually. We'll get back to business here with our students in the live trade room Monday through Friday at 8 a.m. Thank you all for coming out and joining us today. Thank you so much for coming out and seeing us. And come out and see us again tomorrow, 7:30 a.m. Eastern Time. Monday through Friday, we do our crude oil morning prep. We go from the screen all the way to the trading floor. Don't forget to email me, JJ at SchoolOfTrade, or Marty at Traders Audio. And again, thank you all for watching, and we'll catch you guys here. We're on a 23-hour and 30-minute break. We'll see you for a Thursday edition of the Crude Oil Morning Prep. We'll see you guys in the month of August. Have a great Fed day. Don't forget to say hello to Helicopter Ben for me, and we'll catch you guys here tomorrow morning. Adios, amigos. Bye-bye for now.